We have heard from a number of business leaders who have been very concerned about the Fed's rate hikes, the level we're getting to, saying that it's already having a big impact on business and potentially putting us in a recession if we're not already in one. What's your take on this? Because I know as recently as July, you were still thinking the Fed had some room to run.
Yeah, I think the Fed is doing all the right things now, reflective of the fact that the Fed didn't do all the right things earlier this year. The concept of transitory inflation is pretty awful, and I've never heard that phrase before, and I'm sure they'll never use it again. But we overflooded the society with capital. We debased, a fiat currency, and what was it, $8 trillion that we did in 3 years. I mean, we used to do, stuff in Congress was $1 billion, and that was a big deal. $1 trillion. And how could you not expect that to create inflation? And not only a minor inflation, but, 10% inflation is a serious scenario. And I'm not even sure that that's really reflective of how much inflation is really existing.
So if the Fed's doing the right thing right now, you would encourage them to keep this up? What Jay Powell said yesterday was right. And that means what in terms of the pain that the economy is going to feel?
Well, I think that the likelihood is that we're going to have a recession. Frankly, that's what happens when you flood the world with money and everything is free. You lead to excess. And excess ultimately leads to a recession.
Can the Fed do it by themselves by trying to do this? Because other central banks, not the Bank of England, which just did 75 basis points in the last few minutes, but other central banks like the European Central Bank have kind of indicated that they're going to pivot a little bit because of how bad the recession there is anticipated. And I just wonder the resolve that you're going to have in the Federal Reserve and other places if the global recession really starts to pinch.
Well, I don't think that there's ever been much of a case for unified action worldwide. And the attempts to do so have not been very successful. We have a particular situation here. I mean, during the pandemic, the U.S. was far and away the leader in relaxing covenants and making money free. And that means that on the other side of that same coin, I think the Fed has to be very resilient to bring this inflation back to normal.
I guess I wonder what you're doing with your investments at this point. If that's the case, then stock market probably has further to fall. Interest rates maybe move higher from here. What do you do as a result?
I think interest rates are going to move higher from here. I think that a lot of the discussion about interest rates have talked in terms of absolutes, when in fact I think relatives are more important than absolutes. So, taking the cost of capital from 2 to 0, in my opinion, accomplished very little. Taking interest rates from 0 to 2 accomplished very little. And it's only now that we're in the 3s and 4s and on our way to the 5s, that we're seeing some impact. But it's still very early, and I wouldn't get, I don't think there's any basis for being overly optimistic that this will be done very quickly or without pain. I mean, if you go back to end of World War II to today, we've had a series of recessions. We've never had a recession without a liquidity crisis. And if I were guessing, I would think that a liquidity crisis is the next item on the agenda.
Are you hoarding cash then?
I'm sorry?
Are you hoarding cash then?
Well, I guess I've been hoarding cash for some time. And at first I said, gee, holding a lot of cash in an inflationary environment, maybe not so smooth. But the more I looked at the situation, the more I was convinced that, liquidity is value. and there's definitely a liquidity issue that's arising. I mean, at Equity Residential, we just finished redoing our revolver. Now we're an A- company and a behemoth, $40 billion company, and very low leverage. And getting that revolver done was a challenge. It was hard.